The US pending home sales number came out yesterday at 8.1% month over month. Now, this was a huge increase, the biggest increase in pending home sales since June 2020. Now, this is a leading indicator of the housing market, so it shows we had some strength in the housing market for the month of January. And this was mainly caused by bond yields coming down a little bit, and bond yields affect interest rates for mortgages. So basically, mortgage rates ended up coming down a little bit, which made affordability a bit better, and that's why this pending sales number went up a bunch. Now, unfortunately for housing bulls, this rally is probably going to be pretty short-lived because bond yields have started to come back up this month. So on our next round of economic data for housing, we'll probably start to see some more weakness again. Now, this is also something the Federal Reserve is going to be watching, and this may give them a little more ammo to keep interest rates higher for longer. That's because there's a very tight correlation between strength in the housing market and inflation. There was a study that came out yet last year, and take these numbers with a bit of a grain of salt, but basically this study said that up to 50% of US's inflation could have been attributed to the rise in the housing market. And they said, well, obviously a lot of it was because the rise in the shelter component of inflation, but then a lot of it was because the wealth effect. Basically, when people see their house prices going up $100,000 a year, they stop saving as much and they spend lots more because they feel really rich. So the Federal Reserve definitely doesn't want to see this recovery in housing right now. So this data is definitely something they'll be paying attention to and factoring in when it comes to their next interest rate meeting.